So what a week we've had. Instead of the doom and gloom that we're used to seeing on a daily basis where mortgage rates go up and interest rates go up and the federal government's running out of money and everything else, well, it's actually been a pretty darn good week. So let's start with mortgage rates. Here's where mortgage rates are. These are the top 6 products people use when they're buying their first house. And right over there, rates are now 7.375, 7 3/8. We're at 8% or a little over 8% about 2 weeks ago. I referenced in some of my videos, mortgage rates plummeted and people were like, Dan, it isn't plummeting, it's only 3/8. Well, if you put this into perspective, it's an 8% adjustment. Rates are down 8% from where they were just 2 weeks ago. So if you equate this out to the Dow, that means the Dow would have dropped 3,000 points. So if the Dow dropped 3,000 points, do you think headlines everywhere would be the Dow plummeted? You betcha. So without further ado, let's get over to the economic news that's basically bringing all this good news to fruition. And then we also have good news from the federal government. They passed a spending bill. Then we have a lot of union workers that are actually settling on agreements right now. It's nothing but good news right now for a lot of pieces of this puzzle. So if you're looking for doom and gloom, maybe switch to another channel because today I just want to give you the positives behind a lot of things that we're seeing in the economy, and especially with real estate. So right now, yesterday I called that the mortgage rates will drop about 10 basis points, and that's basically what we saw across the board. So if you didn't check out that video, please check it out. It'll be right up over here. But let's get over to the economic calendar that basically caused or with the reflection of what's going on right now. So basically this week we saw a lot of inflation numbers that the Federal Reserve is trying to keep under control. A lot of these numbers are coming in actually really good. And then the one component that the Federal Reserve, and I'm still on the opponent of, they're saying we need the unemployment rate to spike over 4% to really cause inflation to come down. I'm not on that bandwagon, but even those numbers came in a little bit nice this week. So if we put all this into perspective, the recap of the week is we had the consumer inflation numbers. They came in lower than expected, lower than the last readings, and lower than economists expected. Then we said on the inflation side of the producers, producer prices actually went down and they plummeted. Look over here, the PPI month over month, previous reading was 0.4. It actually was a positive 0.4. It went down to a negative 0.5. That's a 1% adjustment, a 1% change. Huge move there. Initial jobless claims, that's what the Federal Reserve is watching. That spiked from 218,000 to 230,000. And then we had building permits, basically came right in line with today's numbers. So let's get over to some of the good news that we have for the week. Right through here, Biden signs funding bill averting a government shutdown. Good news on that front. So that's helping the markets right now. Next thing is United Auto Workers approve a 4.5-year contract with the Detroit Big Three. Also a plus and a win for the employment categories. A lot of these people are getting substantial raises. So would that help make housing a little more affordable? Oh, only time's going to tell, and it's only in your situation out there. So the good news continues. The mortgage crash or the housing crash that everybody's been talking about. Well, let's really take a little bit of a brief dive into this section. Here are the top biggest markets in the whole country. Look at this. Hartford, Connecticut, year over year from October 2022 to October 2023, it saw double-digit gains. Many people have been sitting on the sidelines for the 2021, 22, 2023, saying there's a housing crash coming. It's coming, folks. Well, in some parts of the economy, it's not there. But if you go down through here, and I called some of the biggest markets last year, I said, if you're in a market that gained 20, 30, 40% over the last 2 years, you're probably going to see some of that coming back. And we are seeing that in the Austin area. Austin is almost down double digits. It's only down 9% year over year. And New Orleans, for some reason, New Orleans is also down over 9, well, just right around 9%. But if you want to look at the country as a whole, you can scroll up through here. The United States as a whole is the home appreciation is up 2.28%. The norm is about 4%, about half of where we were. I expected the whole economy to be flat. And doing a little bit better than I expected. Now, I'm not FOMOing houses, folks. I'm not FOMOing real estate. It's up to you guys. If you're looking to buy into this market, we're here to assist you. If you think the market's overblown, if you're in an area where it's just unaffordable, that's your priority. And if you're not out there looking for a house, then hopefully you can get some economic data from my channel on a daily basis to get a tune of what's going on in the markets and what's going on in the economy. So now let's scooch over to the Federal Reserve. What's the Federal Reserve going to do at the next few meetings? Because a lot of these numbers are coming in really well. Well, there's no expectations of any more rate increases. You're going to see this right here. What we watch on this channel is we watch the CME Fed Watch tool. This is the Chicago Mercantile Exchange. They created this tool to give us basically a reading on what the markets are expecting from the Federal Reserve. So if you break this down, it's saying what is the likelihood the Federal Reserve will change the federal funds rate at the next meeting or in the further meetings that they're coming out in the next year, maybe year and a half. Well, if you go through over here, these numbers have been up and up and up. So what I want to do is put this into perspective with you. Right across the top right through here, what you're seeing is where the federal funds rate would be. Okay, right now we are at 5.25 to 5.5. So that's where we are right now with the federal funds rate. Federal funds rate is the actual interest rate that the Federal Reserve controls. Look through here. There's a 99% probability they're not going to rate hike in December, which a lot of economists were thinking. And then they're not going to do it in January, and they're not even going to do it in March. So now the expectations are there's a 50% chance or better that they're going to pivot early next year and start to reduce rates. Maybe that's one of the things that'll make housing a little more affordable in our economy as we see today. So with all this news that we had throughout the week, and especially today, what's the markets doing? Well, the markets are basically flat. Here's what we watch. I watched the 10-year Treasury just to get a beat on what the Treasury market's doing. But what we really follow on this channel is the MBS market. The MBS market is basically a mortgage-backed security. It's a bond that trades on Wall Street. That's yield is the biggest component of your mortgage rate. What we follow here on the channel is the price. What's going on with the price? What you see right here is if the price, all you need to know is this. If the price is going down, that means the yield is going up. There's a yin-yang effect, an inverted effect with the rates in regards to the price and the yields. So meaning right now, we're basically seeing a flat market. So mortgage rates should stay basically stable on where they are right now. So let's get over to where those rates are. Again, these are the top 6 products people use when they're buying or refinancing a home. What do you qualify for? So what I always ask people to do on a daily basis is, please, if you're out there and you're like, hey, I was a part of the United Auto Workers and I got a big raise. Or you're a pilot at one of these airlines that just got a big raise. Or you're another member of one of these unions that just got big raises. Now is it making housing a little more affordable? Well, it might be. So how do you find out if you can qualify? Is your credit good enough? Is your income good enough? Do you have enough money for the down payment? What I ask you to do is visit our website. Okay, my name is Dan Frio. I'm a licensed mortgage advisor all throughout the country. I'm licensed in all 50 states as well as Puerto Rico. So if you're looking to purchase a house in this market, you're maybe looking to buy an investment property. You're an investor. You're looking to fix and flip, buy some properties to rehab them. We would love to help you. We specialize in loans for people out there that are self-employed. If you're self-employed, you're probably having a really difficult time getting approved. Your taxes, you write off everything on your taxes. So are there other programs that you could qualify with? There are. There's bank statement programs. There's profit and loss statement programs. There's a whole bunch of programs out there. So what I ask you guys to do is don't disqualify yourself. Please reach out to us. We would love to help you navigate this market. If you're looking to buy your first house, maybe your first investment property, or you're looking to do some fix and flips or rehabs. Love to help you. How do you find out more about us? Well, visit us at therateupdate.com. You can reach out to us a few different ways. One, you can hit the apply now button, put in the application. Many people think, okay, I don't really know what I'm looking for. Maybe I am self-employed. Maybe I, drive for Lyft and I make money. Maybe I'm just on fixed income. Can I qualify? And you don't really want to apply now. What else can you do? Well, you can do a few other things. Go down to the bottom of our website. You're going to see some things right here. You're going to see blogs, different programs that we offer. And then you're going to go down through here. You're going to see mortgage calculators. And then at the bottom of the website, you're going to notice there's an 800 number. You can call us. You can give us a call at 844-775-5626. We have people on staff almost all day, every day. Or if you want to reach out to me directly by email, you can email me directly at dan@therateupdate.com. Thanks so much for watching, guys. God bless. If you need some assistance with buying a house in 2023 or 2024, or at least kicking the tires, reach out to us. Have a fantastic weekend. See you next week. Bye-bye.